Dear students, welcome to the sixth session on the chapter Death of a Partner. Here in this session, I am going to take up the next question of this chapter. Usha, Nisha and Disha are in partnership sharing profits equally. Disha died on 30th 6 2015. The balance sheet of the firm as on 31st March 2015 was as follows. On the asset side, we find cash, debtors, stock, investments, freehold property and goodwill. On the liability side, creditors, general reserve, investment provision, reserve for bad debt, capitals of three partners Usha, Nisha and Disha. On the date of death, it was found that freehold property was worth rupees 57,000, debtors were all good, stock was valued at 25,000, a liability for workmen's compensation for rupees 3,000 was to be provided for, investments are valued at rupees 7,500 and were taken over by Usha. Goodwill was to be valued at 1 year's purchase of the average profits of the last 5 years. Then last adjustment, Disha's share of profit up to the date of death was to be calculated on the basis of last year's profit. And the profits for the last 5 years, 2014, 13, 12, 11 and 10 in the descending order they have given. Then prepare revaluation account, partners capital account and balance sheet of the new firm. These are the informations given in the question. Now let's analyze the question. It is given that there were three partners, Usha, Nisha and Disha, and their profit sharing ratio was equal. Means if there are three partners, the equal ratio means 1:1:1. Who has died now? Disha has died. The last partner has died on 30th 6 2015, and the balance sheet of the last year, it is prepared on 31st March 2015. Then when the current financial year begins, 1/4/2015 and it ends on 31st March 2016. In between this financial year, she has died on 30th 6 2014. So from the beginning of April, we have to count the months till her death. So April, May and June. We have to include June because she died at the end of June. Only for 3 months she was there as a partner. So the calculation of profits, it is based on those 3 months for which she lived during the current financial year. In the asset side, we find cash, data, stock, investment, freehold property and goodwill. So here existing goodwill is there. In the liability side, creditors, general reserve, investment, provision, reserve for bad debts and capitals of three partners. Okay. On the date of death, it was found that the first one, just like the previous question which we discussed in session 5, the similar question we have taken up in this session. Here also they have given the information about revaluation of assets and liabilities. So that should be taken into consideration while preparing the revaluation account. Coming to the first information, freehold property was worth rupees 57,000. Earlier the value of property was only 30,000. Now it has been 57,000. There is increase in the value of freehold property, which is a revaluation profit. It should be credited to the revaluation account. Next one, datas were all good. So in the previous question, the datas was given like datas gross amount less RBD, the remaining net amount was taken to the amount column. But here in this case, what they have given, gross datas is given in the asset side and the reserve for bad debt is given in the liability side. This is the other way of showing the provision created against datas. So here it is given that datas were all good. The gross amount of 18,000. So they have come to know at the time of revaluation that they could recover entire 18,000, which means that this reserve which they had created earlier is no more necessary. So if you are creating a new reserve, then it is a revaluation loss. If you are cancelling the earlier reserve, so then it is going to be profit. So it should be credited to the revaluation account. Next one, stock was valued at 25,000. Earlier the value of stock was 28,000. Now there is reduction in the value of stock to the extent of 3,000, which is a revaluation loss. So it should be debited to the revaluation account. The next one, a liability for workmen's compensation for 3,000 was to be provided for. If you check the liability side, we do not have fund like workmen's compensation fund. If that fund is there, then this liability could have been adjusted from that fund. As there is no workmen's compensation fund, this liability will be treated as good as one more new liability is brought into record. Okay, so when you're bringing into record new liability at the time of revaluation, that becomes the revaluation loss. So it should be debited to the revaluation account. Next one, investments are valued at 7,500 and were taken over by Usha. So here there are two adjustments. First one relating to revaluation of investment and the second adjustment relating to taking over the asset, that is investment, by one of the partners. Coming to the first adjustment, investment was valued at 7,500. You have to compare it with the book value. Earlier the value was 8,000. So there is reduction in the value of investment to the extent of 500. Usually what we do, you show this as a loss on revaluation and debit it to the revaluation account. But there is one item in the liability side, that is investment provision. This provision is created to set off such losses which may be incurred because of the revaluation. Okay, so when there is a separate provision created, this 500 loss cannot be shown in the revaluation account. This investment provision or investment fluctuation fund, it is just like a accumulated reserve. So that loss of 500 on the revaluation of investment should be set off against that provision of 2,100. Remaining 1,600, it will be distributed among the partners, just like how we distribute the general reserve. Okay, then coming to the next adjustment, that is investments are taken over by Usha. One of the remaining partner, the first partner Usha, has taken over the asset. So what is the entry we have to write? Concerned partner's capital account data to concerned asset account. So here who is the concerned partner? Usha's capital account data to investment account. She is taking over the investment for rupees 7,500. The next one, goodwill was to be valued at 1 year's purchase of the average profits of the last 5 years. So what is the formula we are going to use here? Value of goodwill is equal to average profits of 5 years into 1. We will get what is the total value of goodwill. Then we are going to calculate what is deceased partner share. Deceased partner is Disha. What is her share in the revalued goodwill? Only for that extent we are going to show the adjustment. But if you see the asset side, there is already existing goodwill. This existing goodwill, how we made the entry in the previous question, same way, the existing goodwill has to be written off to all partners capital account in the old profit sharing ratio. That is including the deceased partner, 1:1:1 ratio. So the entry will be all partners capital account data to goodwill account. That is the first adjustment. Then coming to deceased partner share in the revalued goodwill, the entry would be remaining partners capital account data to deceased partners capital account. That adjustment will be done in the gain ratio. So what is the gain ratio of the remaining partners? 1:1. Then Disha's share of profit up to the date of death was to be calculated on the basis of last year's profit. They have given the information about 2015. So what is the last year then? 2014. The profits are given in the descending order. You have to be careful. So 2014 the profit was 12,000. So for 12 months the profit is 12,000. For 3 months for which she lived, what is the profit? We will get what is the expected profit of the firm for 3 months. Thereafter we are going to calculate what is the deceased partner share by multiplying 1/3. So these are the informations given in the question. We are going to first show all the working notes. Okay, coming to the first working note, that is relating to treatment of goodwill. The first entry will be passed for writing of the existing goodwill. All partners capital account data to goodwill account. The amount of 13,500 given in the balance sheet, it is written off in 1:1:1 ratio. Okay. Then the second adjustment is for with regard to revalued goodwill. So the entry here, before that we have to calculate what is the revalued goodwill. Total profit of the last 5 years is 54,000. Average profit 54,000 divided by 5, we get 10,800. Total value of goodwill 10,800. Average profit into number of years of purchase, we get 10,800. Now we have to multiply it by 1/3 to know what is the deceased partner Disha's share. So it comes to 3,600. Okay. So this 3,600 has to be distributed between the remaining partners Usha and Nisha in the gain ratio. So the entry would be Usha's capital account data, Nisha's capital account data to Disha's capital account. So 1,800, 1,800 and 3,600. Second working note is to calculate what is deceased partner share in the expected profit till the date of death. Last year's profit is 12,000. 3 months profit. That is how we calculate using the cross multiplication. For 12 months the profit is 12,000. For 3 months how much? We get 3,000 as the expected profit of the entire firm. We require only deceased partner share, that is 3,000 into 1/3, which comes to 1,000. Then we are going to prepare the revaluation account. Let's go back to the question and find out what are the adjustments to be shown in the revaluation account. Please remember, while preparing the revaluation account, we are going to just show the adjustment that results in the revaluation profit or revaluation loss. So we need to show the first adjustment, that is regarding the revaluation of freehold property. Datas we have to show, stock we have to show, liability we have to show, and this investment, since there is investment provision, we are not going to show. Goodwill and expected profit we are not going to show. Only these are the adjustments which we have to show by freehold property for the profit on revaluation, and this is for cancelling the reserve for doubtful debts. This is for revaluation loss on stock. Then this is for liability brought into record relating to workmen's compensation. So thereafter we are going to close the revaluation account to find out whether there is profit or loss. So we get the balancing figure here, 22,800. So this represents profit on revaluation, which should be transferred to all partners capital account in the old profit sharing ratio, that is 1:1:1. Okay, then coming to the second requirement to prepare the partners capital account. Partners capital account has to begin with the opening balance, so as given in the balance sheet, by balance brought down 30,000, 25,000 and 21,000. Then in this question we have general reserve given for rupees 6,000. Okay, this should be distributed by general reserve 2,000, 2,000 and 2,000. Then we are going to transfer the investment provision. Investment provision we have in the liability side to the extent of 2,100, which is a kind of accumulated reserve. But out of that, this loss on revaluation of investment is adjusted. Remaining 1,600 is distributed among all the partners in 1:1:1 ratio. So it will be 533, 533 and 534. Okay, 1 rupee is adjusted. Then we are going to transfer the revaluation result by revaluation account. The profit on revaluation is transferred. Then the next adjustment will be for goodwill. That is, first we are going to write off the existing goodwill, all partners capital account data to goodwill account. The next one, for adjusting the deceased partner share in the revalued goodwill, the entry is Usha's capital account data, Nisha's capital account data to Disha's capital account. So here you have to write by Usha's capital account, amount should be written in deceased partner's capital account. Again by Nisha's capital account in the deceased partner's column. Then the other part of the entry you have to write here, to Disha's capital account 1,800 and 1,800. There is one more adjustment for investment taken over. Who has taken over? Usha. So what is the entry? Usha's capital account data to investments account. So you have to write in the debit side. Then you have to also write one more item, that is deceased partner share in the expected profit amounting to 1,000. So we are going to write it as by profit and loss suspense account. Okay, so here we have shown in the working note what is the deceased partner share in the expected profit amounting to rupees 1,000. The same amount is written in the capital account. After these adjustments, we are going to close the capital account of all the partners one by one. First we are going to close the capital account of the deceased partner, that is Disha. So here we have the credit total of 35,734. We are going to adjust that goodwill loss because of writing of the existing goodwill. We will have the balance of 31,234, which will be transferred to Disha's executor's account. But coming to other two remaining partners, the total of credit side are these 40,133 and 35,133. So we will have balance of 26,333 and 28,833, which are the closing capital balances here. Okay, then we are going to prepare the balance sheet. So here the balance sheet we have to prepare taking into consideration all the revaluation profits and losses. Cash, there is no cash related transaction, we are going to write the same balance. Datas, we have to show the gross amount because the provision is already cancelled. Stock, we have to reduce the loss on revaluation of stock, that is 3,000. Remaining amount of 25,000 is written. Freehold property, we have to add the appreciation and write. And this profit and loss suspense account, as I also told you in the previous question, when we write the entry for deceased partner share in the expected profit, here you find the entry profit and loss suspense account data to deceased partner's capital account, that is Disha's capital account. So this entry, this profit and loss account suspense account is showing a debit balance of rupees 1000. It has not been closed. It will be closed when the remaining partners prepare the profit and loss account at the end of the year. So as it is showing a debit balance, you have to show that in the asset side. Okay, then coming to Creta, same balance you are going to write. Then you have brought into record one more new liability which you are going to write here, liability for workmen's compensation. Then Disha's executor has not been paid any amount. The same amount which you have transferred to executor's account you are going to show here. Then you are going to write the closing capital balances of remaining partners, 26,333 and 28,833. So when you write all these items, your balance sheet tallies at 1,05,000. Okay, so this is the solution for the present question. Let's take a few more questions in the upcoming videos. Thank you for watching.